Hi, I'm Patu from FreeFinCal, and in this video, I want to talk to you about the worst mutual funds in different categories over the past 6 years. Before I begin, I've tried my hand with a poll in the I button here. You can click that and please vote. I'll comment more about that then below. So, to define a worst mutual fund, we must have some kind of definition. So this data is sourced from the FreeFinCal October 2019 mutual fund screener. You can get the screener from this link. You can screen it for the best mutual funds. I have screened it for the worst mutual funds. So I've taken HDFC Equity Fund as an example, and you can see here, since January 1st, 2013, there are 1,174 two-year periods possible. If I shift the 2-year window by every business day, there are 1,174 two-year returns possible, 927 3-year returns possible, 682 4-year returns possible, and 438 5-year returns possible. Notice that over 2 years, the fund has only outperformed the benchmark, and I'll talk about the benchmark below, only 440 times. That's only 37%. Over 3 years, it's only 23%. Over 4 years, it's only 16%. Over 5 years, it is only 2%. So a worst fund is defined as a mutual fund that fails to beat a category benchmark at least 50% of the time over every possible 2 years and every possible 3 years and every possible 4 years and every possible 5 years. So that's it's very difficult to become a worst fund, but still there are many. So that's the definition, and these are the categories and the benchmarks used. For a focused fund, I've used Nifty Large Mid Cap 250 Total Returns Index. This is a 50% large cap index Nifty 100 plus 50% Nifty Mid Cap 150. Large and mid cap fund, the same index. Large cap fund Nifty 100. Mid cap fund Nifty Mid Cap 150. Multi cap Nifty Large Cap 250. Small cap Nifty Mid Cap 150. I'd explained why small cap funds should be benchmarked to a Nifty Mid Cap 150 index. So there are some caveats before we proceed. These the category benchmarks are tougher than what the benchmarks the mutual funds themselves will use. But tough standards are necessary because our mutual fund industry is one of the most expensive in the world, and so it's you can't let them off easy by assuming that the benchmarks they themselves choose are okay. And even if you are invested in any of these funds labeled as worst, it doesn't mean you should immediately reject. It is only a call or a reminder to check the performance more closely and then take a decision. And I have ensured that all these funds have a value research star rating. This means that I'm not taking the rating itself seriously, but I'm assuming that their investment mandate or the nature of the portfolio has not changed dramatically because of the SEBI categorization rule. So studying the past history must be justified. And I have removed some funds which became qualified as worst, but because of their past history change, I have removed some funds. Some categories like ELSS, dividend yield, value oriented, sectoral, thematic, aggressive hybrid were not considered because because I had used the same benchmarks in the screener. It's a bit too harsh for some of these funds, therefore I have not included them. But you can use the screener and sort for the worst and best funds using it yourself if you want. And we have required a minimum of 400 5-year return periods. That means that the fund should have been started on or before June or July 2013, roughly. So that's it. So now let's get to the funds. So in the focus funds, there are 7 out of 17 funds. DSP Focus, Birla Focus, HDFC, ICICI, IDFC, Principal, and Sundaram. There are now only one funds per category for each AMC, so it's just enough if I say the AMC out. Large and mid cap funds, 7 out of 22. Tata Large and Mid Cap, L&T, Franklin India Equity Advantage, BOI, AXA Fund, ICICI, Reliance, now called Nippon India, Vision Fund, UTI Core Equity Fund. Large cap fund, 6 out of 28, that's not so bad. Baroda Large Cap, LICMF Large Cap, JM Large Cap, DSP Top 100 Large Cap, Waterfall this DSP Top 100 has had. Old investors will know what a good fund it was. IDFC large cap, Taurus large cap, mid cap funds, SBI Magnum mid cap, BNP Paribas mid cap, Taurus Discovery, Aditya Birla mid cap, Reliance Nippon India now growth fund. Multi cap funds, there are 12 out of 34. HSBC multi-cap, DSP equity, HDFC equity, Reliance multi-cap, Baroda multi-cap, Canara Robeco equity diversified fund, L&T equity fund, LIC MF multi-cap, SBI multi-cap, Taurus Star Share multi-cap, Union multi-cap, UTI equity multi-cap. Finally, in the small cap fund, there's only one fund, ICICI Prudential Small Cap, but it was earlier called Indo-Asia Fund, but it does track the small cap index in the past. So it's a bit of a cat on the wall kind of situation to call it a worst fund. So you'll have to dig deeper in that. So the rest you can download. I mean, you can get the screener for ₹111 and screen it yourself. Now, if you are invested in this fund, there's no need for you to panic. I have a video on how to review your mutual funds in 3 simple steps. The video is linked in the post, but I'll also link it here. So what I would like you to do is check if the fund has bet its benchmark over the last 3, 4 and 5 years, or at least check how the performance is from the date you started investing. And if this is satisfactory, just continue. Otherwise, if you don't like the performance, quit the fund in full. That is, stop further investments and also pull out the units and shift it elsewhere. So that's the list of worst mutual fund performers. Please participate in that poll. I hope that comes out right. Let me know if you're invested in these worst funds and what you're going to do, and any other comments. Bye bye.